Hello and welcome. You are watching the Mutual Fund Show on Business Today TV. I'm Sakshi Batra and with me is Shailendra Bhatnagar, editor for markets at BTTV. And today on our show, our focus will be on the equity, large and mid-cap funds. So welcome, Shail, and thank you so much for taking the time out for this discussion. First up, let's start off with the basics. What exactly are these large and mid-cap funds? How do they work? What's the logic behind them? And this will really set the tone for all the viewers who are watching. Many of us, our viewers are millennials, first-time investors. So this will really set the basics right for them.
Right, Sakshi. So thank you for having me over. And yesterday we had talked about the flexi cap segment, and now we are focusing on probably the largest core that is there in our mutual fund sector, which is large and mid cap stocks. So you can see market capitalizations of anywhere between 20,000 crores to about 17, 18 lakh crore rupees being reflected in these funds, and they form the core of any portfolio that mutual funds can be constructed. It's like the main dish on the buffet, and it's critical to have at least one or two such large cap and mid cap funds in your portfolio.
Okay.
And this is the segment that was the first to begin with somewhere in the 1960s, when the Indian mutual fund industry was launched via the US 64 scheme. And over a period of time, we've seen some stellar star studded returns coming from equity, large and mid cap funds, Sakshi.
Absolutely. So, what is the investment thesis behind the large and the mid cap funds? You did say that one or two of these should definitely form a part of our core portfolio. But what exactly is the thesis? And, how should millennial investors approach this?
So, Sakshi, as you can see, a lot of half one 2023 returns we are showing you on the screen, and we've seen some fantastic rallies happening on Indian markets
Yeah.
over the past 2 odd years, and that's reflected very well on the net asset values of these equity, large, and mid cap funds. Ideally, your mutual fund portfolio, if it is for say a notional value of 10 lakh rupees, you should have about one or two such funds whose
Okay.
names would be appearing on your screens anytime within your portfolio. And since these are the core holdings, the foundational structure on which a good mutual fund portfolio is built, Sakshi, about 30 to 40%, easily 40% of your monthly SIPs and overall mutual fund corpus should be in these funds. And
Okay.
typically, the sensible investors invest for more than 5 years of time, and therefore that's the minimum holding period. If you can hold on for 20 years, 15 years, 12 years, you'll get stellar returns. And the money that has to be invested is via a good systematic investment plan.
Yeah.
That's the way forward. Ideally, investors should approach the website of the AMC on their own. And I'm very insistent on this: choose the direct route,
Yeah.
which means you will pay lesser expenses over a period of time, and definitely the growth option. Don't choose dividend. It's actually.
Okay, so two or three things very, very clear here for all of you who are starting off your journey and beginning your investments, especially with the core portfolio, building up that with the large and mid cap funds. 30 to 40% of your overall portfolio should be allocated to these funds. Minimum holding has to be 5 years, so do have a long term vision right there. 5, 10, 15, 20 is where you should be looking at investing your constant SIPs, is what Shell is suggesting right here. So Shell, why is this space on our focus today? What are the kind of returns that we've seen in the first half of this calendar year from these funds? Any of those who have topped the charts that have come up in your study?
Yes, actually. So there'll be a wonderful graphic which our PCR team will just show you. There are about 4 to 6 funds that I have named, and the amount under management of these funds is anywhere between 2,100 crores to 25,000 crores. They are very, very popular in the markets, and against the mid cap return, the equity mid cap index return of say 6.3% and a sector average of 9.5% over the last 6 months, you've
Okay.
seen Axis growth outperform by 15.8, Motilal Oswal outperformed by 13.2, HSBC large cap fund 12.7. So you can see the returns, Sakshi, in
Hmm.
some cases are 1 to 2x that you've seen. And if you see the 1 year return for Axis Growth Opportunities Fund, it's 28%. Motilal Oswal large cap mid cap fund
Yeah.
is 40%.
Yeah.
So these are the kind of sterling returns that you manage, and this is not on a small base. Motilal Oswal
Yeah.
has 1,600 crores. Axis Growth has 9,000 crores. Mirai Asset Emerging, it's a five-star blue chip fund.
Hmm.
The return over a 1 year period is 22%, and this
Yeah.
is the largest fund in this category
Okay.
with 25,300 crores of assets under this management. Fantastic portfolios. You see the bluest of blue chips in large caps and the fantastic growth prospects of mid caps that are in these funds. They stick to quality, they stick to multi baggers, they stick to compounders, and that's the reason why you get such stellar returns from these, Sakshi.
Absolutely. But Shell, if you could also clear the air about, there are absolute blue chip funds out there in the markets. There are only mid cap focused funds also out there in the market. And the list that we are showing are largely a mixture of both large and mid cap. So how does one really approach them, all three, the baskets that are present over there? Why does it make sense for one to approach a fund which has a mixture of both large and mid caps?
Yeah, that's a wonderful question, Sakshi. Actually, over the last 4 or 5 years, the regulator, which is SEBI, and the sector body, which is AMFI, have come up with very, very specific regulations on what your fund name is, what you are trying to do, and what should the investor buy into.
Hmm.
So, like we discussed yesterday, in FlexiCap, there is complete flexibility in the case of a fund manager to buy
Yeah.
any kind of market capitalization across any geography. In the case of equity, large cap and mid caps, there is a predefined list of 250, 300 shares in which fund managers can pick and choose. So when you and I, as an investor, get into this fund, we know very clearly what the fund manager's universe of investing is, and he cannot go beyond that.
Hmm.
Therefore, it is named in a manner which a simple investor can understand that this is what I am buying, and I am buying this from this corpus of 250, 200 shares which have, which change every quarter. For instance,
Okay.
when you see this rally that's happening over the last 6 months, there are
Hmm.
some mid caps, there are some small caps that have become mid caps. They have doubled in price and
Sure.
therefore market capitalization. So they have come up into this universe. Similarly, some mid caps would have fallen. So they have come down from this universe. So the
Hmm.
universe keeps on changing. A lot of mid caps have become large caps, right?
Yes,
So
absolutely.
similarly, that's the universe that you and I and millions of our viewers uh, buy into when you see names like Motilal Oswal large and mid cap fund. The
Yeah.
clarity that the regulator has asked fund managers and AMCs to provide is to stick to the name and to stick to the breed that they have to invest in. Sakshi.
Absolutely, Shell. So, thanks a lot for clearing that air. That really gives a lot of clarity to all the first time investors approaching this fund investment at large, both the large and the mid cap space. Now, if you could also, you've listed out some wonderful stocks for some wonderful funds right here, which have given stellar returns, especially in the last 1 year, the kind of returns that you mentioned, up to 40% odd as well, and despite being on
Yes.
a high base. But in case one were to understand even a longer performance, maybe a 10-year or a 20-year performance, have any of these funds existed for that long? And what are the kind of long-term returns that we've seen here? Because we are actually talking to all the investors and viewers to have a long-term vision from today. So, something like a 10, 15 years from today. So, it will be great if they can also get that vision of how have some of these funds performed.
So, Sakshi, you'd be very pleasantly surprised to know that several of these funds have more than a 25 year history in the Indian markets, and they have fantastically outperformed both the Sensex and the Nifty. I'll give you an example of SBI large and mid cap, DSP equity opportunities, Tata large mid cap, ICICI Pru large mid cap. These funds over the last 2 decades, each year they have compounded anywhere between 18% and 22%. So if you use the rule of 72 and
Mm-hmm.
you divide the least best performer, which is ICICI Pru, it shows that your money has doubled in 4 years, right?
Hmm.
So uh, in 8 years, it's gone up 4 times. In 12 years, 16 times. In uh, you know uh, 16 and 20 years, the magic of compounding has worked very well. If you
Yeah.
look at 22% at which SBI large and mid cap has appreciated each year over the last 20 years,
Yeah.
your money doubles in about 3 years and 4 months. And just look at how beautifully the compounding happens.
Yeah.
And by doing nothing, by just putting in a lump sum, or if you do an SIP, those 5,000 rupee SIPs have turned people into crorpatis
Yeah.
by typically doing just nothing, ensuring that you have 5,000 rupees invested each month. And if
Yeah.
you're really lucky, raising that amount by 10% a year. These
Yeah.
returns have been fantastic, Sakshi. They've, traveled the aspirational uh, rally that we've seen on the Sensex and the Nifty. I remember the Sensex at 3,000 somewhere in 2001, after the Twin Towers were
Yes.
taken down in the US. Now it is at 65,000. That's a 20%. That's a 20-time appreciation, and that's what's
Yes.
happened here. These funds have appreciated faster than the Sensex, but
Yeah.
all that is needed is a mindset which says, I will not stop my SIPs. I will continue to systematically invest and prosper.
Uh-huh.
And that's how money is made in the easiest possible way. And I can assure you, even from these levels, some of these funds will compound at a rate of 14-15% annually for the next 2 decades.
Okay. Any particular top bets right there, Shell? From these, where investors should be looking at? How should one really choose? Now, these are all the funds like you talked about, where the 20-year CAGR return has been upwards of 18% for all of them. So,
Yes.
can one just take any fund for their portfolios? What should be the criteria with which one approaches this?
So, like I said, it is difficult for us to take names and show some kind of bias. I have chosen the best possible funds in the screen that is there in front of you. So there are 3 plus 3, 6 plus 4, 10 funds. Just pick any one or two from this wonderful list, and keep them to your portfolio, add them to your mutual fund portfolio.
Mm-hmm.
What Invest directly via the AMC, choose
Mm-hmm.
the growth option,
Mm-hmm.
ensure that you invest via a systematic investment plan, and definitely your holding period has to be more than 5 years.
Yeah.
And if it is 10 years, 12 years, 15 years, trust me, you're going to mint money.
Okay, so let's quickly look at all these 10 funds again to see what kind of returns have we seen here. You can pick any fund and you can also speak to your own financial advisor before investing in them. These have compounded, your money over the last 5 years, over the last 20 years or so. And in the last 1 year, especially when we see it's MOSL large and mid cap that has outperformed off this list, 40% returns for this one. Axis Growth Opportunities Fund, 27.8% returns. Of course, Kotak Equity Opportunities Fund, 29.4%. HDFC Large Mid Cap at 31.4%. HSBC Large and Mid Cap at 32%. All of them, most of them have actually given you upwards of 20% 1 year returns. On a year to date basis, of course, the only one which is in single digit is Mirai Emerging Blue, which has given a return of year to date of 8.4%. The rest of them are all in double digits, upwards of 10 to over 15% odd right there. And over the last 20 years, we've also shown you these list of 5 funds that have actually given you multifold returns. and you can see 21.9% CAGR, 20-year CAGR percentage that you can see for SBI Large and Mid Cap, DSP Equity Opportunities Fund at 19.7, Tata Large and Mid Cap at 19.5, ICICI Pru Large and Mid Cap at 18.2%. So wonderful right there. Shall also help us and our viewers understand what is the taxation aspect that one should keep in mind before investing in these funds.
So, Sakshi, the longer you hold, the more money you make and the lesser tax you pay. That's
Okay.
the thumb rule as far as the present taxation structure is concerned. So, if you buy today and you sell in less than a year, then the entire gain is taxed at about 15%. And if you keep the units for more than 1 year, say 2 years, 3 years, 4 years, then the first 1 lakh rupee profit that you make on the entire investment is tax free, and the remainder of the profit is taxed at 10%. So,
Okay.
holding for the longer term is what the government wants you to do as well. It gives you an incentive of a lakh of rupees as tax free gains, and it is taxed at just 10% the remaining profit compared with 15% on short term capital gains. Sakshi, the amount of money that people have made by being long term investors is phenomenal.
Mm-hmm.
Your money has grown up 20, 15, 20 times over the last 2 decades.
Mm.
And it's outperformed any kind of index, whether it's the Nifty or the Sensex or the NSE 500. A
Mm-hmm.
20% CAGR, 22% CAGR is something that cannot be ignored. It basically means that your money is doubling in 3 years, 4 months, and the taxation is wonderful. And that is what investors should do in India. Go through the mutual fund SIP route and
Yeah.
ride this wonderful rally that's unfolding in front of us. Sakshi.
Absolutely, Shell, and rightly put, we've seen the kind of returns. You're already seeing the stock markets at record highs, Indian markets outperforming the rest of them as well. In case you do not understand the stock markets and fear to invest on your own, then definitely mutual fund is the right way with which you can invest and be a part of this stunning rally that we are seeing in equities and help your money grow over a period of time as well. We've constantly talked about how on Business Today TV that your money lying in banks is actually money that you're losing because of the inflationary aspect. But in case you deploy some of your funds in your mutual funds accounts, then definitely over a long period of time, your money is set to grow. You've seen stunning returns that Shell has mentioned on all of these funds, be it on a year-on-year basis or on, long-term, 15, 20 years kind of perspective as well. Many thanks, Shell, for being with us on this show and discussing all these wonderful funds. Yes, Shell.
Sakshi, I'd just like to add one more thing. Yesterday we had discussed flexi cap funds.
Yes.
Uh, so they can be anywhere between 15 to 20% of your overall portfolio,
Right.
which basically means just choose one flexi cap fund.
Yeah.
Large cap funds and equity, large and mid cap funds can be 30 to 40% of your portfolio. So
Mm-hmm.
choose any two or one from the list that we've shared of 10 good quality funds.
Mm-hmm.
That takes care of somewhere like 60% of your
60%.
portfolio. Tomorrow and day after, or subsequently in this week, we'll be discussing what should comprise of the remaining 40%. They are mid caps and, of course, an international fund and a tax saver fund. So stay tuned with Sakshi and create a wonderful portfolio of fabulous high quality stocks via mutual funds. Invest every month and enjoy this fantastic rally that we are seeing unfolding on the last week. Sakshi.
Absolutely. Many, many thanks, Shell, for being with us and sharing all these wonderful insights with all our viewers. I hope this show inspires you to take that first step in case you're still away and still, hesitating to take that first step towards your investments, because this is the way how you can definitely approach all your wealth creating goals and your life goals as well. So stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets coming up right up next for you. Don't forget to subscribe to this channel and also continue to engage with us on other social media platforms. That's Facebook, Twitter, LinkedIn, and also Instagram. Until then, many thanks for tuning in.